Morning, guys. It's Monday, August 18th, 5:22 a.m. Central Time. Grain markets are mostly lower this morning. December corn futures down 2.25 at 403. November soybeans down 4.5 at 1038. December Chicago wheat down 3 cents at 524. December Kansas City wheat down 4 cents at 524.5. December spring wheat up a half cent at 589.75. Mackenzie is off today, so I am all by myself. If you guys are newer to the show, I did the show by myself every morning for like 5 years. And it's only in the last couple of years that Mackenzie's been on as a co-host. So we're going old school this morning. Let's start off with some weather. Some parts of the U.S. Corn Belt have turned very dry over the last 2 weeks. Large parts of Illinois, Missouri, Kentucky, Indiana, and Ohio have seen little to no rainfall over the last 14 days. Talk of a flash drought situation has seen a little bit of acceleration. The forecast calls for only minimal rainfall for these areas. During the same 2-week previous time frame, temperatures averaged 2 degrees to 4 degrees above normal. Above normal temperatures likely to persist for a few days until a massive cool front hits the Corn Belt this weekend. This is an excellent map that's on my screen from our friends at Crop Profit. These blue areas over the last 14 days saw 1 inch of rain or less. But in reality, a lot of the light blue areas in particular, the lighter stuff, saw trace amounts to nothing over the last 2 weeks. And when you zoom out to a slightly different view, there's a lot of areas of the Eastern Corn Belt that look like this. You've got this big area of central Illinois. There was a lot of Eastern Missouri into parts of Indiana, Ohio, Michigan. It's fairly widespread. Here's the temperatures over the last 14 days. Some of those areas in central Illinois that didn't catch the rain were running 4 to 5 degrees above normal. So it's not necessarily the best setup for the soybean crop and potential in particular. This is an important time of year. Here's temperatures over the next 7 days. This is still above normal, but really that cool front and these cooler temperatures emerge, I believe, like Friday or Saturdays when it starts to cool down. The 8 to 14 day, you're talking like 5 to 6, maybe even 7 degrees below normal on average across almost the entire U.S. Corn Belt. So we've got a big cool down coming. With regard to rainfall in these dry areas, there's really not much in the forecast. This is the Euro model in the next 5 days. Could be hit or miss for some areas of central Illinois, but a lot of areas, again, we'll see either nothing or just trace amounts. Indiana, Ohio, Michigan look even drier, and it doesn't really look much different when you go out through the 10-day period, still pretty dry. So you would think that maybe the soybean market would react to this, and maybe it has. We've seen some strength in the soybean market. It kind of stalled on Thursday. The one item that I think has perhaps held the soybean market back from rallying is the lack of export demand. The export piece is a big piece of the demand pie. China's been totally absent from new crop purchases, and we hope that they emerge pretty soon. I think that they will. Pro Farmer will run its annual Midwest crop tour this week. Scouts will fan out across 7 key corn and soybean states from Ohio to South Dakota, traveling today through, I think Thursday is the last day. They'll stop in fields along the route to measure ear counts, pod counts, overall crop health. The tour offers, I believe, the most widely followed real-time snapshot of U.S. crop potential during the late summer period. They will release results daily, and they'll have final production estimates at the end of the week, I believe, on Thursday night. So Pro Farmer does this every year. They've been doing it every year for as long as I can remember. In today's premium video, I'm going to have a whole bunch of statistics and charts, Pro Farmer versus USDA, Pro Farmer versus August USDA, Pro Farmer versus USDA final. Are they good at predicting the crop or not? The way that I look at the tour is not necessarily through a statistical lens. I just think it's super interesting to see what guys find out there. I don't know that the purpose of the tour is to predict within 1 bushel what the national average yield is going to be. I think it's just to give us a boots on the ground look at the crop. And the scouts on the tour do an excellent job. I know there are some people who have a negative opinion of the tour, and if you do, that's fine. It's not my crop tour, but I think they do a great job. December corn futures finished last week near unchanged despite a hugely bearish report from USDA. Really impressive price action. On Tuesday last week, USDA estimated this year's U.S. corn crop at a whopping 16.7 billion bushels. That was more than 700 million bushels above the average trade guess. The D's corn contract bottomed near 392 on report day prior to a weekly close near 405. Export demand for U.S. corn remains excellent, while some concerns do exist regarding the crop. Big crops typically get bigger when it comes to the August USDA estimate, but there are obviously exceptions. This is really, I can't even know. I don't know if I can explain how fantastic this price action is. So we went down, we made a new low on report day. We tested it 2 days later, and then we bounced back on Thursday, kind of Thursday and Friday, and then kind of leveled off. So it's it's pretty impressive to me. If you could break out above this little trend line that's on my screen here, you need to close above 405 today. Maybe you've got a shot at that chart gap in the low 430s. I think that would be fairly reasonable. But just the fact that a whole bunch of new selling didn't emerge, or for very long at least, following that report is very impressive to me. We've got some great premium stuff out recently. Last week, I did 5-minute Friday. Stocks to use and prices. I had some corn and soybean charts where I took the stocks to use ratios and paired them with prices historically to kind of spit out some ideas of what the current situation could lead to. I talked about some of the caveats because there is no perfection and no science behind any of this. I did a corn and soybean marketing update on, I believe, Thursday last week. I ran through every sale that I've advised for new crop corn and soybeans, talked about what my plan is. What I do here is very simple, very transparent. I break down everything by crop year, and percentage. I'll basically tell you, and I'll show you spreadsheets. Hey, I advise this sale at this price on this date on this percentage, and here's how it all works together with the previous sales that I've advised. Here's what the game plan is moving forward. There's not any option strategies involved. It's just cash grain marketing. So if you guys are looking for a more simplistic approach, maybe this is something you should consider. You can sign up this morning. Go to standardgrain.com. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. Give that deal a shot this morning, guys. I'll forward you a copy of this morning's email. You're going to want to see today's video on the crop tour. And also our friend Pete Meyer, who's a regular contributor, he's going to be on the tour, and he's going to join us a couple times this week to discuss his findings. Let's keep moving here. The National Oilseed Processors Association released its July crush report on Friday. The U.S. soybean crush number increased 5.6% from June and was up 7% year over year. NOPA members processed just south of 196 million bushels of beans in July. Huge crush number, largest on record and fifth largest for any month on record. So largest on record seasonally. Last month's crush easily surpassed the average trade guess. Let's look at the charts here. So this is phenomenal. It's phenomenal for any year. It's phenomenal for this year. The stocks are very low, which is where we need them to be. Board crush margins and cash crush margins also are very positive. They backed off a little bit, but still historically very strong. I think they backed off mainly because the soybean market has rallied. The crush is projected to account for nearly 58% of all demand for U.S. soybeans during the new crop marketing year, which begins at the beginning of August. And if you look at the breakdown between crush and exports historically, you can see the trend over the last several years. We're crushing more and we're exporting less. And I believe that will continue to be the trend because of Brazil. Perhaps China doesn't like the United States as much as they used to, but I think it mainly has to do with big expansion in Brazil. Talk about the funds very quickly. The funds extended their net short position in the corn market last week. CFTC had its weekly commitment of traders report out on Friday. For the week ending August 12th, large money managers were sellers of 6,000 contracts of corn. They were buyers of 27,000 contracts of soybeans, and the funds were net sellers of 9,000 contracts of SRW wheat on the week. Premium subs, you guys have the fund tracker charts in your emails this morning. The fact that the funds didn't really heavily sell into the corn market following the report is interesting. This data is accurate as of Tuesday's close, so this would have been accurate through the day of the report. And they sold a little bit into it, but not a ton, which I think tells you something. I don't know what it tells you. It tells you that either they had a monster yield number already discounted. Maybe they're starting to consider some of these pollination issues or tassel wrap or tip back or whatever it is. We'll see what they find on the crop tour. But price action, again, is pretty impressive stuff. Outside markets this morning, I don't do cattle, so when Mackenzie comes back tomorrow, she can do cattle. Outside markets, U.S. dollars up a little bit. Crude oil is up 25 cents in the September WTI at 63.05. Treasuries are mixed. Stock market's off just a little bit. Have a great week, guys. We'll be back on Tuesday.